Tradeweb Markets announcing a $785 million deal for Institutional Cash Distributors. ICD is a tech platform for companies to manage short-term investments, especially money market funds. Joining us now is Tradeweb Markets CEO Billy Hult. And we should note CNBC sources its treasury data from Tradeweb. Billy, it's great to have you on the show. You've been very acquisitive since you started as the CEO at the beginning of last year. This is your third deal to date. Rates business is about half of your revenue, but you've been really moving towards diversifying into other asset classes. How does this acquisition continue that trend?
Yeah, that's a great question. Nice to see you, Morgan. Hope you're doing great. 5 years ago, we had our IPO. I was ringing the bell last week. You guys had me on TV. My family was very happy about that, by the way, so thank you. We've doubled our revenue in the last 5 years. 50% of that growth coming from non-rates platforms. So you're right. This has been a real sort of transformation of the company from a rates trading platform into a real global marketplace. The thesis behind it, very, very simple. The markets are more connected than ever. Multi-asset class trading is going to be continually shaped through technology, and customers want a one-stop shop to do business. So we continue to place bets, on that thesis. The acquisition we announced today is a straightforward one for us. We love access into the corporate treasurer marketplace. We're continuing to look for new channels of clients. This has been, I think, from our perspective, a historically underserved client base in terms of access to securities, and we love the ability to to cross-sell with this great company. So feeling really good. I think it's good to do deals. When the organic business is doing as well as it is, I feels like there's a lot of momentum behind what we're doing. So working hard and trying to keep a good humor about things. Yeah,
and certainly asset managers, hedge funds, et cetera. This has been an area where you've done a lot of business over the years, but this really brings you further into corporates as well. When I think of Tradeweb, I think of electronic trading. I think of automation in the context of fixed income and rates. How has that, I guess, digitization or that technological shift for Tradeweb expanded the market and expanded your ability to reach some of these new end users and end markets and potential revenue sources?
Well, the client base is getting more and more sophisticated, not surprisingly. I think COVID and everything that happened through the pandemic, I think, made a very strong point around if you were under-resourced around, the forward march of technology, you paid the price. So my instinct is the marketplace in general has gotten so much more sophisticated around technology. And for sure, the biggest macro hedge funds, the largest asset managers, our biggest clients have gotten way more sophisticated around the search for liquidity in the marketplace. My instinct is, global debt markets continue to grow. That's a good thing for a company like Tradeweb. Private sector intermediation in the marketplace is back. The central banks are playing a lesser role in the marketplace, and these are good times, for fixed income, and for sure to be a fixed income trading platform where there's still so much more room around the further electronification of these markets. It's an interesting moment.
So what is your outlook for rates? And given the fact that we have seen investors being able to earn so much more back on their money in the last couple of years amid this Fed tightening cycle, when the Fed does begin to cut rates and you do begin to see those yields come down, is that going to affect those volumes?
Yeah, it's interesting, right? I was watching your coverage a little bit ago, and I think you were mentioning, I know Jamie Dimon came out with his letter, this morning. I think he had the, sort of 2% to 8% kind of bid ask on the 10-year note. Bond traders can make a lot of money with that kind of bid ask, but I think it goes to show there's a wide range of opinions kind of on where this is going. My instinct is obviously, I think somewhere between 2 to 3, cuts this year. I think, the markets in general are functioning really well. We're seeing a real natural cadence of volatility in our core businesses, government bonds, mortgages, interest rate swaps. So I think the volume outlook for fixed income, particularly on the institutional side, is going to continue to be quite strong.